to the MHA Spring Budget Review. Today we're going to look at the content of the Chancellor's speech and see how it affects you from a business and personal perspective. And I'm joined by my fellow tax partners, Tony Metcalfe and James Kipping, to look at the business and personal side. Turning to James first, budget for individuals, what was there for the normal taxpayer?
Thanks, Rachel. Right, there's 3 points I think I'd like to bring out, not necessarily all relating to yesterday's budget, but we must firstly remember that previously announced was the freezing of various tax thresholds, so the higher rate threshold, the additional rate threshold, and various allowances. Okay, and that of course brings many more people into tax and into higher rates of tax. The additional rate of 45% previously applied to people with income above 150,000. That threshold is being reduced to 125,000 from April 2023. We understand that brings a further 500,000 people approximately into that 45% rate, which if you do the maths, that brings in at least another £625 million of income tax per annum. Onto the capital gains tax side, again, remember that the annual exemption for capital gains is being reduced from 12,300 down to 6,000 for the next tax year, that's 2023-24, and 3,000 from 2024-25. So just a reminder, use that higher annual exemption if possible before 5th of April this year. And you can, as spouses or civil partners, you can do that by one spouse selling investments at a gain, and then the other spouse buying them back, the so-called bed and spousing to bank exemptions. Second point, again, just a reminder really, but it was confirmed yesterday that the ISA allowance, the annual ISA allowance, will remain at £20,000 per individual per tax year. May seem relatively small to many of our clients in the scheme of things, but over a number of years that can bring a large proportion of one's investments into a tax-free environment. Alongside that, junior ISA, or rather the junior ISA allowance, will remain at 9,000. The third point I'd like to raise before handing over to Tony is perhaps the biggest announcement yesterday, certainly from a private client perspective, is the changes to pensions tax relief. Now, the annual allowance for tax relieved pension contributions is being increased from £40,000 to £60,000 per annum, with the aim of ensuring that more highly skilled workers either remain in the workforce or come back to the workforce without the fear of income tax charges on their annual pension contributions. More of a surprise was the abolition of what we call the lifetime allowance. So that's the lifetime limit on the value of someone's tax relievable pension fund. Okay, and now that the abolition of that allowance or lifetime allowance brings sort of 2 thoughts to the table. Firstly, it may now open the door for pension contributions to be made by people who were previously excluded from making them or prevented from making them because they had already got close to or hit the lifetime allowance. And secondly, I would speculate whether this perhaps paves the way for changes in a future budget to bring large uncrystallised pension funds within the scope of inheritance tax. And on that note, I'll hand over.
Yeah, it's an interesting thought, that, James. It'll be interesting to see what happens going forward. Tony, it was highlighted as a budget for growth for business. How does the tax measures help businesses grow?
Just before I go on to the business, I mean, just to finish on the point on the pensions, it was also interesting, wasn't it, that the tax-free element of the pension is going to be frozen. Yeah. So, you know, it does mean that there's more of the pension going to be taxed ultimately when it's extracted by individuals. But just talking about business, there was a lot of praise by Tory MPs, much in business, about the corporation tax hike from 19 to 25. Well, that was retained. So we've got 25% corporation tax across the board. One point to develop and improve productivity was the idea of not extending the super deduction that we've had for the last 2 years that ends on the 31st of March, but something similar in that any businesses investing in IT, plant and equipment, will effectively be able to fully expense that expenditure against their profits. So get 100% tax relief for movable plant, and also 50% tax relief in the year of expenditure for items of plant that's within buildings, etc. So I think it's been lauded as one of the most generous and incentivizing regimes in the world, the idea of fully expensing capital allowances, and obviously the proof will be in the pudding as to how much investment that does drive, and obviously with the expected input of improved productivity. Furthermore, on businesses, there was some minor tweaks to investments, tax reliefs that individuals that might be available under the CDEIS scheme. Albeit comments in the budget speech did talk about a wider review of investment of startup and new businesses in the autumn statement this year. So we'll keep our eye out for that and see what changes might come there. But all in all, I think not unexpected. I think it'd been well touted that there would be a continuation in some form of tax relief for investment by business. And we'll just see how many of those businesses do actually pay the 25% tax rate.
Thanks, Tony. And for further insight in the matters we've discussed, please visit our MHA hub. Thank you for listening.